BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. Welcome to Rec City. Right, so fear in the market, obviously, I can imagine that. But if you're a member of the Patreon or even watch my channel, you would see that we're now back down to the bottom of this range, right? So at the bottom of the range. So there's a few things to be excited about or concerned about, depending on how brave you are, how much cash you've got. Obviously, if you're overexposed, it's not going to feel particularly good. This video will come across like hopium. If you are not overexposed and you have capital available to place and deploy into this market, it should be exciting. Now, just to put it out there, I've been getting a few messages when I woke up this morning on my Telegram. What's going on, man? What's going on? How do we know where the supports are? Do you know? How can you be so sure that? Wind it back a bit here. Nobody knows anything. You realize that, right? Nobody knows anything. When you trade in charts, you have you have indicators. Indicators, for the most part, are all based around price, volume, and time, right? So they give similar reads depending on what type of style you use. And with that, it gives you an educated guess, statistical bias, not anything other than that, of where supports might be. This is why we always make a video, the royal we, this is why I always make a video in the morning saying this is my expectations generally for today, next week, and blah, blah, blah. So we've had this box in here for a little while now, and now we're back down to the bottom of the box. So that's cool. You know why? Because that's the expectation, is that this is the range we're going to play in between now and the halving. Now if we break down, then yeah, we're going to have to enter into a new, we're going to have to start to rethink where supports might be. But until then, this is where the main support ought to be, based on what I expect to see in the market, which is that it's still a bullish market. Now, I just want to wind it back a tiny little bit. Let's go all the way back down here, because this is a volatile asset class. This is Bitcoin. It's volatile, really volatile. We know that, but sometimes we forget what volatility actually means. So look, we were in 2017 over here, September. Oh my God, what's happening? Oh, we pulled back to the tune of around about 30% from the top to the bottom. Can you imagine the pain, the fear? What's happening? It's over. It's whoosh. So this sort of stuff happens all the time in Bitcoin, right? It happens all the time in altcoins. It happens actually in a lot of markets. It's not the end of the world. It's just part and parcel of the way that crypto moves, right? So we're seeing that sort of movement now. And we're back down to the bottom of the range. Not just the range that's that I've put in this box, but also a 21 exponential moving average is being tagged yesterday and today. Now, look, we're getting rejection so far on the 20 moving average. That's uptrending. So, you know, there's the resistance today, 66,500. And tomorrow it'll be higher and higher. Then there will be a cross, which is not particularly bullish, I have to say. But yeah, so it's not the end of the world. I've moved my bloody itchy cloud into the RSI there. So look, this is a support. What do we do at supports? You're supposed to buy them, right? And what do you do at resistances? You're supposed to sell them. This is why I rushed home on the XRP video, because when XRP started to run, I started getting messages. Is it too late to buy XRP? Is it too late to buy XRP? Well, you should never buy in a green candle. You should always buy in a red. And we've now had a pullback since that top, where I said, you know, this isn't where you buy it. If we should start to think about selling it on rips like that, not buying it. And we pulled back 21%. And on the Patreon live streams, at least for the last couple of them, we have been assuming at some point soon pullbacks of between 20 and 40% on altcoins. So now XRP pulled back 20%. It's not a big deal, is it? It's all part of the game. Where have we pulled back into? All part of a golden cross retest. 50 exponential, and the next one down is going to be 57 cents, 200 exponential, which is an absolute buy. If you wanted XRP, again, the people who wanted it when it was going up probably don't want it now it's gone down. This is the counterintuitive nature of trading. You have to think about buying red candles, not green candles, if you want to make money. If you want to lose money, it's a lot easier to lose money if you're buying the green candles, because look what happens after that. Now, this is an extreme example because we've gone down 20% over the last week since moving up like that, but it's an example like many others. So what else should we ever think about now that we're determining a potential bounce at the bottom of a range, which could easily lead to a previous local higher, maybe even the top of the range, which is up here at 76,500. Not saying this for hopium. I've been saying this for the last few days since I've put this box in there saying this is my expectation. You can rewind, have a little look. That's what I've been saying. Now, buying the dip based on Bitcoin through the, buying the altcoin dip through the lens of Bitcoin is a decent strategy, provided that your altcoin has come down to a support in its own right. Now, XRP has done that. What's Ethereum doing? It's not doing that on the daily. It is doing that on the 4-hourly. So Bitcoin and Ethereum both coming down to significant supports based on moving averages. This is a golden cross retest. Have we tested that 200 exponential since we come down here? We haven't. We made the golden cross and we basically ran all the way up. So this, right this very moment in time, absolutely on this tiny little skinny white line, 3,417, is a major dip buy. Now I know Ethereum is not everybody's favourite. Everybody's banging on about Solana, and fair play. It's rallying. And look, it is just a chart to trade. I'm not highlighting any of these things saying that this is the best chart you will ever see in the world, and if you buy this you'll be a millionaire by lunchtime. That's not what I'm saying. We're talking about market, we're talking about stability in the market, we're talking about supports in the market. And when you're thinking about that, you look at the two major players that take up the majority of the dominance of the entire crypto market. Bitcoin, Ethereum, both at major supports, both looking for a bounce. And look, if we think about this 4-hourly on Ethereum, normally when you have a retest of a 200 exponential after a golden cross, you would expect a V-shaped recovery. That's what you would expect most of the time. Remember, statistical likelihood of an outcome, not bias, not hopium, just pure statistical likelihood. You know, if there was a gun to my head right now and it said, right, if this bounces from here, you live. If it fails, you die. I still wouldn't feel particularly comfortable in that scenario. However, I would feel more comfortable with that way around. Whereas if the gunman was to say, if this bounces, you die. If it breaks down, you live, I would feel worse like that, because statistically, it's more likely to bounce, V-shaped recovery to where it fell from, and maybe even continue. Now, there is a flip side to all of this. I mean, let's face it, there always is. There is a short signal that was generated on the Ichimoku cloud at 3,571. There is that does exist. And so what this might mean is that we bounce and get rejected on the next major resistance, which could be from the 10 exponential all the way to the 20 moving average. All of that is possible. But personally, my Ichimoku clouds are good. They are good. They're better when they're static, and then they make a signal when we've had sideways periods of price action. That's when they're most. That's when they're most useful. In trending moves, they're not as useful. If we get a sideways chart and then you get a signal, that's the best, because it's giving you telltale signs that an uptrend is about to begin, and it'll be a significant one. So this one is a short signal, but this is a major support. So who wins? Major support or short signal? Who knows? Again, we're back to that MMA fight strategy, aren't we? We've got Conor McGregor, the Ichimoku cloud, and we've got Khabib, the 200 exponential moving average. Place your bets now. That's basically what we're looking at. The only other things we can think about would be any form of bullish divergence, which on the 4-hourly we are working on one. We've not closed it. 8 minutes away before we close it. Take it to our 1-hourly. What do we have? Bullish divergence on the RSI there. Same thing, I would imagine, to see that on Bitcoin. Yeah, we've got bullish divergence on the 1-hourly. Same thing on the monthly index. So look, support, major support. That's what it is. That's what we're talking about. Major supports right this very moment in time on a Sunday, which is usually a pretty lame day to trade, because fears start to flood into the markets on a Sunday, because we are waiting to see what the American markets open like on the Monday. So there's always a big question mark as to how crypto will perform, and it's very common to see sell-offs on a Sunday, or at least more of a static red closure, I suppose. So look, I am not massively bearish. In fact, I'm more excited today than I would be on any other point, because it means that yes, the bottom of my range has been established and revisited once again, giving us the opportunity, not just for Bitcoin but for Ethereum, to buy the dip. But there is absolutely no guarantees. Now, I did take a bit of extra risk. Took on board some extra risk, but this is the good thing when you are in a large cash position. You can take on the risk if that's what you choose to do, and I sometimes do. And you won't catch me doing this much. I bought SHIB and I sold it after a 100% rally. I bought it again, and we're looking for this one to start to trend back up. So we've got a range on SHIB as well. I don't know why it didn't save in. All the way from here to here. This is our buy zone. This is the buy zone. We're looking at this on a daily. We've got candle body, candle body, candle body. And we've got wick. So now we are in the buy zone, right? For the daily, there's only resistances. Support below us is actually quite far down. So this is the first buy zone. And look, highlighted by the bottom of the buy zone, yet again, the magical 200 exponential moving average on a 4-hourly golden cross retest. We caught such an epic move. Did over 100% rally very quickly, sold it. We're consolidating, we're moving down into a major area. Again, horizontal, we can see a lot of resistance, and then finally a breakout, and then support on the 4-hourly and on the daily. We're even seeing that measure up now, where we're finding resistance on it. So this is the buy zone. If you want to take on, risk, like a lot of risk, you obviously are going to be looking at charts like this. And if you are looking at a chart like this and you're wanting to take on that risk, you need to think about selling. And this has always been the thing on the Patreon. We've been talking about this because the main thing that we want to do is to wait for a much bigger, longer lasting correction in the market, which I'm not sure. Obviously, no one's ever absolutely sure, but I'm pretty confident that we will see one of those this year, and that's where the majority of my money is going to be going in as we consolidate for a longer, deeper correction. So that's why I'm hesitant to deploy more than 50% of my cash. I've been in what was for a while a 70% cash position. And then with the gains that I've been making, it grew to a 40% deployed, so 60. And it was getting closer to a 50% cash position just because of the gains. But a lot of cash, basically, since December. I've been sitting in a lot of cash since December. And now, look, this is one of those moments where you think, right, what's the point of having cash if you're not going to use it? So yeah, I deployed into SHIB, and I'll continue to deploy into SHIB until this level. And what would I be expecting from SHIB? Am I expecting a millionaire starter kit? No. Am I looking for a reasonable bounce of 39-40%? I am. So I'll be looking for this to trade from this area to this area. And if we break out, brilliant. But I've been telling everybody to be realistic about wherever you buy and sell, and not to hold on for dear life at this point. Don't get used to high prices. Take part in the market. Buy the dip, sell the rip is what we're talking about. So this is one. You've obviously got one for XRP. We've got one for Ethereum. Again, all based mostly on 4-hourly time frames, which is a trader's chart. It's a trader's chart. And Bitcoin itself, the daily, hitting a major support, bottom of the range, and if we do wick down lower, it's down to 61,500. I'm not seeing that that's going to happen today. Don't really think that that's what we're going to be seeing today. If the US markets open in the red and close in the red tomorrow, then yeah, we will easily see that. And guess what that is? It's a BTFD, 61,000. Don't be afraid of the markets, but again, and if you haven't got quite a handle on how, I don't want to sound patronizing, really. Trading takes quite a long time to be able to do successfully for most people. Like, I've been trading for over 10 years now. I would say the first 2 years was a learning process of the indicators and what I was most comfortable with. But then after that has continued to be an emotional journey, learning to control your emotions. Because you can learn the indicators, that's easy enough, to learn the indicators, what they are, what they mean, how to use them, that's easy enough. But then to grasp the emotional aspect of it. To buy on a day like today, that takes some doing, you know? Unless you're some kind of psychopath that feels nothing, then yeah, of course, no one wants to buy into what the fear looks like. But I would suggest that this is all part of the learning process, and once you get a handle on that sort of thing, then that's fine. Now, if you can't get a handle on that, then that's something you need to learn, because that's gonna be a problem for you your whole life if you can't grasp that emotional aspect of trading. Right, so I'm going to leave it with there. I hope that this bounce follows through and we see a recovery to at least the Bollinger Band Center, if not a V-shaped recovery on things like Ethereum, because that's what that would entail, bouncing from those areas. That's absolutely what we should expect. Buy the dip is what I'm expecting. Is it the last dip? I don't know. Is it a dip to buy? I would say definitely. Right, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.